Good morning, everyone. Today is August 13th, 2024. It is 7:16 a.m. Pacific here in Las Vegas, and I am going to draw an arrow to show you where I think the price is going to go because of my TSL approach to reading the markets and timing market reversals. Market reversals are when the smart money, the professional traders, decide to move the price. They change the price. They can't make any money. They can't pick the pockets of the at-home trader if the market isn't moving. Well, the at-home traders combined can't get their act together and all work as a team and move the market because they don't know each other and they don't have enough money, but the smart money knows how to do it. They've been doing it for years and years and will continue. I sat with my seven-figure mentor. Here's an area of support. I sat with my seven-figure mentor and I said, how long is this going to last? When's this going to end? And he just laughed and said, we're all creatures of habit. The smart money are also creatures of habit. They figured out a way to manipulate the market to head fake the novice trader and bleed their accounts because they will always trade on emotion. What we teach here is trade by rules. Etched in stone rules is how I refer to them. Now, I will tell you that this could end up being a 30-minute video. If it does, I am going to, and for all of you divergence people, I'm sitting here talking as I'm marking this up. Just wanted to show you, I see the divergence. I see that it's bearish. I see that the average person's going to look at that and go short, but not me. This is what I think is going to happen. Now, I can't predict the future, but I've got TSL, which for me is the next best thing. So this is where I believe we are finding support, which is why I drew this blue rectangle under the price bars. By the way, this is a 2-minute price bar. We use 3 different time frames, as you will see. But this one shows a nice slingshot. It's my favorite setup. It's the vertical rectangle at the bottom. It's the distance between that dotted gold line and the valley, the bottom of that white line. These are called TSL1 and TSL2 oscillators. That distance gives me a heads up that there is a stronger than normal, usual, and I know you kind of have to take that with a grain of salt when it comes to trading, but there's a little more likelihood that the reversal will take place. In other words, the odds go up a little bit when you see a slingshot trade. They actually go up a lot. It's my favorite setup. So I saw this, didn't get into the trade. You can see that my matrix is up there. This is my trading computer. This is not a what do you call those? Gosh, it's been a million years since I've traded on demo account, sim account. I don't trade with a sim account. You can see my account number up there, 174744196. It's a TradeStation account that I've had for over 25 years. So, and I typically record these trading videos, not training, trading videos with 10 contracts. Everybody can do their own math. And it's a situation where if I take a 500 contract trade, people will get all worked up and say, I can't do that. Why are you showing that? You're showing off. Okay. Now, if I take a 1 contract trade, they kind of do the same thing and say, what, are you afraid of your own system? You're not putting any money in there? I'm like, okay, 10 contracts. I started trading 10 contracts on the recorded trades years ago because everyone can do their own math. Everybody out there has a different amount in their trading accounts and they will trade what they are comfortable trading. So anyway, 10 contracts. In this case, or in most cases, hold on, let me get rid of this. In most cases, we are getting into these trades with under $3,000. Now, I guarantee I'll say something about it in the class, in the demo in a little bit. But the beauty of trading the Qs and the SPY are that those are two ETFs, exchange traded funds. They expire daily. The deltas are off the chart. The leverage is incredible. The investment in 10 contracts in many cases is about $2,000 or a little bit less. So people think they have to have deep pockets to do this, or an Ivy League education or Wall Street experience, and none of those are true. So I'm sitting here almost talking about this like I don't know, what do they call those rooms that people go to and listen to all the time? Everyone and their brother's doing one from their mother's basement. Being a little facetious. Podcast. I kind of sound like that. Let me put the target up here. The target is $1 away from where we got in, and you're just going to have to take my word for it that the price, the price of Tesla, which is what this is, you can see it in the symbol in the upper right corner of the matrix, that the price of Tesla at the time was $204.52. So we go for an initial $1 target, price target, profit target. Why? Because most intraday price swings are $1. Now that little tidbit of information is known by less than, I'm going to say 10 or 20,000. I know it's a big spread. I'm going with 20. I would say not 1 in 20,000 traders knows that the average move, whether it's Apple, Meta, whether it's, well, some of those move a couple bucks. The higher dollar ones do. But the Qs, the SPY, we're hitting our profit target right here. It's 205.52. Now here's what you do with that information. Now look at the indicator. The TSL one, which is the white line's actually pointing down, and it's now making another lower high, which is bearish. So all the more reason why, hey, I just hit my, exceeded the $1 profit target. I'm going to take my money off the table and wait for the next TSL qualified setup. Okay, we don't get into these trades and hold on to them and expect them to go to the moon because we are in the market. Too many people feel like the market owes them something just because they clicked their mouse and got in. That is rubbish. It is rubbish, okay? It is not a good way to trade. You should have a predetermined exit strategy, whether it's stop or loss. Okay, we get into these trades with an initial 15-cent stop on the option premium, not the stock. Now, once the stock or the ETF goes 40 cents in our favor, we will tighten our stop to break even. Okay, we do that to get in what's known as a free trade. We want to be in a situation where we have zero risk. Our number one focus here at Wealth Builders Institute is to trade with minimal risk and realistic profit targets and scale our investments. Because once you learn how to do this, you don't need to learn anything else. Okay, talk with you soon.